this morning is to have a conversation about where fintech is going next, where the next 5 years are going to take us. And to do that, we've brought together some people who, as I would say, because you have to understand, the reason I admire people like this is because I don't have entrepreneur DNA. The French have no word for this, by the way, but I have advisor DNA. So I'm very good at going down the pub and saying, why doesn't somebody acquire card transactions through mobile phones or something like that? I'm very good at saying that down the pub. These are people who are very good at going down the pub and saying, I'm going to start a company to do those things. So this is why their opinions are important to me, and I hope they'll be important to you too. So let's get the discussion going by talking about, there's a couple of different aspects to this I want to cover, because I want to cover, obviously, the fintech, the technology part of it, but I also want to cover some of the bigger picture stuff, some of the bigger trends that are going to be shaping our industry. So I'm going to start just by asking the panelists just to tell you a little bit about their organization and their perspective. Please, starting with Cyril.
Hi everyone, I'm Cyril, co-founder and CEO at Lydia. Well, Lydia is the French leading mobile payment company. We started in 2013. We started with basically P2P transaction, kind of a Venmo for the US people here, if any. And for the French, well, you know what Lydia is. Everybody says, je te fais un Lydia, I Lydia you. So today we have like 3 million users, and we've slowly but surely transformed Lydia from a mobile payment app into financial services super app or platform, if you want. So today we offer account, card, but we also distribute loans, insurance, and all kind of financial services and lifestyle services.
Fantastic.
Through the app.
And would you like to mention to the audience who your investors are?
Yeah, we have a certain number of investors, but we recently closed a round of 40 million euros led by Tencent of China. The rest being insurance companies, CNP from France, and asset managers, Odo BHF, but also French VCs, Exchange and New Alpha, and family office Groupe Duval.
Paul, what's your perspective?
Hello, so I'm Paul Taylor. I'm founder and CEO of Thought Machine. Thought Machine is a fintech company that's a little bit longer, older than PFF, founded in 2014 in London. Our mission is cloud-native core banking systems. We are a B2B fintech company, so we sell to other institutions, most often banks. What are we trying to do? We're trying to build a completely modern, completely scalable, cloud-native core banking system that means that a bank can operate completely independently and not have to use any mainframe or legacy technology. We sell to established banks, we sell to challenger banks, and we sell to people who want banking at scale and banking at reasonable cost.
What was the origin of Thought Machine, Paul?
So previously I worked at Google. So I was a software engineer at Google, and Google had acquired my previous company, which did something completely different. It did text-to-speech. And so I spent 3 years at Google, and I learned I'd say indoctrinated is probably the word, but I became a cloud-native person, both in business and in engineering outlook, and I looked at what scale can be. No disrespect to a bank, but a bank would think it's big if it had 10 million customers. In the real tech giant world, it's 100 million is the entry point, and 500 million is when you get proper bragging rights. So the scale of it's amazing.
Many years ago, I used to work on Google Wallet. Many years ago, I was in a meeting which again involved Chinese companies, and they told me they were running a pilot mobile payment project. So that's quite interesting. How the pilot's going? Well, the pilot's only 10 million people, so that was. So we have to adjust our thinking.
Got to start somewhere.
Yes, and in Google, for instance, it launched lots of products. But if your product had less than 10 million end users, you would pretend it was some sort of prototype or some sort of early stage thing, because you had to justify the numbers afterwards. But when I worked at Google, I learned what scaling is. I learned what the cloud really means. And not to put a plug in, I'll be talking in a cloud session later. But if you want my expertise, it is in the cloud. But of course, cloud is the answer to a problem. The problem is how do you build technology at scale and resilience and a platform which we can innovate upon. Yeah.
Michael, you built a company from nothing, essentially, into a very successful business. Would you like to tell the audience a little bit?
Yeah, so Michael Kjellén, I'm the founder and chairman of a business called Azimo. It's a cross-border payments platform, and we help European customers send money from, the 27 countries in Europe at the moment to 200 countries around the world. I've done lots of businesses in fintech, so it's a continuation of a cross-border theme. I did a business called Small World Financial Services, much more traditional. It was a roll-up of offline money transfer companies, ultimately acquired by a private equity firm. And then I co-founded Tandem Bank with my business partner, Ricky Knox, and then I guess very active angel investor in fintech businesses, things like Comply Advantage, Modular, Liberis, a whole bunch of those. So we've got, yeah.
All of which, by the way, don't be modest, those are fantastic companies.
I'm all in on fintech.
Yeah. Well done. Okay, so let's start at the technology level and work up. We spoke yesterday about some of the technologies that have been shaping things. What do you guys feel personally are the technologies that we should be keeping an eye on for this medium term, for the 5-year kind of horizon? What sort of technologies are you looking at?
Well,
anyone?
I'd say that a couple of things for sure going to be very big, because we've been talking about it, but we haven't really pushed it far. The first thing is really how you use and you leverage the data. So anything related to big data, machine learning, artificial intelligence is certainly something that every fintech CEO I know is investing massively in. We do the same. So there's definitely going to be a lot of not human intelligence brought in that business. The second one is less intuitive, and it's, to me, something that's very, very important. We just scratched the surface with Lydia, but if you think about it, financial services is a very, very cold world. So when you look at your bank account statement, it's just numbers and letters, and it doesn't mean anything. But if you think about your money, it's basically what you did with your life. So I think there's a lot of emotional intelligence can also be brought in financial services, and it's stuff that we've seen extensively and pushed very far in the gaming industry that should absolutely, and we'll work hard with our partner at Tencent to bring that to the financial services. I'm sure we're not going to be the only one, and finance is going to get a lot more personal.
Can I ask you a quick question about the big data thing from the banking point of view? So if that view's correct, I'm not disagreeing with that, if big data really is the source of competitive advantage in the future, has the European Commission accidentally killed the banking industry by requiring PSD2 to open up bank data to these tech giants without any kind of reciprocal requirement for the tech giant? In other words, if it's all about data, then Amazon and Google, these guys are going to win because they have all of the bank data because of PSD2, plus all of their own data.
Well, I would say the answer to that is kind of yes and no, but remember, so
Well, I'm the consultant.
Right? Yeah. But it goes both ways, because you have to say, so imagine your thesis is correct. This gives tremendous access to the tech giants. But look at the tech giants. They're giving us tremendous access to what they have. So if you want to put a petabyte database on Amazon, you can. If you want to aggregate all the data yourself, you can. If you want to run a Google TensorFlow machine learning package, you can. So you ask yourself, actually, I mean, what is the direction of technology and information? And it's true they can do it, but they're also doing a lot of stuff too.
So can we come back? I want to talk to you more about TensorFlow in a minute. If
sure.
We come back around to that. But just to make the point about the data, Barclays has to provide an API to Facebook so that Facebook can slurp up all of my, obviously with my consent.
Yes.
But there's no API into Facebook where Barclays can go and say, who are Dave's friends? What are they up to?
Yeah, I think probably one of the most interesting trends to watch is the response of the regulators to financial services and the opening up of these APIs over the next 5 years. And the Americans are sort of lagging behind and protecting their own tech industry. But in Europe, you're going to see an awful lot of regulatory upheaval. And that, I think, both on everyone's worried about the tax, but that's going to be followed by a lot of stuff around data. GDPR was only really the start of the Europeans getting to
Yeah,
customer data.
And you're very right. The tech companies do not allow, for the large part, APIs into their system. If you try and write a screen scraper for the Google search engine, you'll be stopped dead in your tracks because they're constantly hunting for people to do it. Screen scraping in banks is, as we know with Plaid and everyone else, is a pretty large part of what goes on. So, yeah, I think you got a good point. That it should be a level playing field. More controlled and permissioned access is better.
Well, I'm not that pessimistic, actually. You know, to me, PSD2 is just the transposition of GDPR into the financial services sector. Basically, the core idea is you are the owner of your data, and that will be in financial services. It will be for every data. It will be
correct. Yeah, absolutely.
But if you look at just the raw figures, European banks just do not have that much money. A lot of them do not have any return on equity at all, let alone anything like what people like Google and so on earn. So surely they're in a much weaker position than it appears superficially. They can't spend the money. I mean, they can spend money on guys like you. But they can't outspend those big guys.
I'm not sure, actually. So if you look at if you take a representative of Tier 1 bank, so when I left Google, there was 10,000 software engineers in Google. I talked to a few Tier 1 banks in the first year of Thought Machine. They had the same number of engineers. Oh, yeah. Right. So I
believe there are more engineers at HSBC than there are at Google.
Correct.
Yeah. Certainly the case.
The last time I heard, I think it was 40,000 versus 20,000, something like that. So. Yes, I know, but then they go, but all our engineers are deployed on business as usual. But why are they deployed in business as usual?
It's about where you put your money.
In Google, there is no business as usual. You build a fantastic infrastructure for the software to run, and then which is perhaps 10 or 15% of the people, and then the rest of the people are doing product work and things that are shipping at a regular interval. If banks adopted that mentality, sorry, I'm on my soapbox here. So if banks adopted that mentality, it would free up their budget, and they could either not have the developers or have the developers in assessing these things.
I remember, and actually I think it was here, I remember seeing UBS on, I can't remember the exact figure, but I think the UBS IT budget is 2 billion euros.
That's pretty typical for Tier 1, I think, yeah.
And the guy said 90% of that budget goes on keeping the core system up.
Yeah, that's probably right.
So only 10% of that budget is discretionary. And of the 10% discretionary budget, 90% of that goes on regulatory changes. So the actual amount of money banks have to spend on new stuff is minuscule. On aggregate, probably people in this room have more money.
But that is not forced upon them. They have taken that path of having to have in tremendously manual, slow processes to manage their BAU. I mean, they need to look at how tech companies run their tech operations, and then say, there is a different way of doing it.
Or they need to distribute less dividends and invest in more meaningful stuff.
Fine.
But
I see it time and again. Building great software is really, really hard, and it's a cultural thing. You have to have the right mindset. You have to have the right infrastructure. You have to have the right sort of DevOps mindset, and then you can build great software.
Yes, but we have. Put it this way: how to invent the future when no one is showing you the path is hard. But these tech companies have figured out so many of these problems: how to do safe upgrades, how to do encryption of databases, how to do secure authentication. We don't need to invent this stuff from scratch. We can just copy it. And what's more, a lot of it is available in the cloud tools. There are plenty of people like me who have left these companies and are in fintechs. And so it's not easy to implement all these things, but it's not like we are running high-risk programs where you don't know if these processes will work or not.
Yeah, and what you're seeing a rise of components that you can just plug in. So you can have Currency Cloud to do your foreign exchange. You can have Comply Advantage to do your PEP sanctions AML screening. You can have a next generation credit checking aid, or you can do the whole lot bundled up as Thought Machine. And actually, for a lot of these banks, it's all about the monoliths that they've inherited, or they've, acquired 7 or 8 of them, and they're desperately trying to tag them all together. You should probably just throw it away. Spend all the money on changing the culture, and get in getting the next generation core banking platform, because they all run them anyway. It's like, Fiserv and FS.com and, Tenemos, they're all massive businesses and they're selling to banks. But, the product they're selling is not really fit for purpose anymore.
That was one of the questions I wanted to ask yesterday about the point about the challengers, was, because I'm not convinced challenger is the right, I think niche is probably a better word than, challenger implies they're doing something really different. But in reality, they're all doing the same things, aren't they? We haven't really seen anything like the super app, Alipay, WeChat thing that you were talking about. Like, Challenger so far, it's like a current account and a debit card. And
yes, but the word arises because the expectations are so low that a new entrant can enter the market. The fact that anybody's done it at all is seen as a minor miracle. But I agree, they are not. The news is that they've done it at all, not that the products are radically different. Hopefully that will come.
I also see this time and again. In emerging markets, it's much more dynamic because people are coming from, having their first smartphone 5 years ago. Quite often, particularly in the markets that we serve, no financial services at all, to having a super app that they can do credit and debit cards and everything else. It's incremental in North America and Western Europe, but it's revolutionary in emerging markets, and that's the big difference. So it feels different.
The smartphone has been the transformational technology. I remember years ago, I went to a thing, we just went for Barclay cards, and I went to a thing, some fireworks, I can't remember why, but Anthony Jenkins, this is in the old days when he was head of Barclay card, and he gave a great speech, which I still remember, and he said, we're working in cards because we think they're going to get rid of cash, but actually mobile phones are going to get rid of cards. And I thought that was quite a far-sighted, and that's sort of coming true. Mm-hmm. So that was definitely the technology, but next, just cycling back round, big data, you're right.
Just one sec. The mobile phone and the smartphone is not the technology. The technology is the mobile internet. The smartphone is just the interface. The mobile internet is what makes everything so different today. You are willing and you can't live without accessing everything anywhere at any time. And if you can't have access, your smartphone is useless.
So mobility
really,
is
what made this possible is mobile internet.
Yeah. But if PCs had had SIMs in them, it might have gone a different direction, right?
Can I address your question? So I'm new to financial services, as you know, and I've told you the backstory. But at these conferences, this conference is very good. But at many of the other conferences, there is this kind of hype versus reality debate, and the two ones that seem to be hype were. So the current hype is AI. The hype of a few years ago was blockchain. And so I kind of get AI. I used to work in AI, so I kind of get it. Blockchain, I never got it. But I think the banking industry does suffer from, they hope a kind of silver bullet or a messiah is going to arrive that will just fix all these problems. And I go, it's exactly the opposite. If you look how a tech company works, it is doing all the basic things very well and in a cumulative sense that builds up good organization. And I think many times I've listened to interviews of great sports people or great artists, and they're asked, what is the secret? And they give a very mundane answer, which is practice and hard work and things like this. But people don't like those answers. People want to know that it's some fantastic gift. But when you look at a bank, the number of small things it does wrong is huge, and it adds up to a terrible cost base and a terrible customer experience.
I think there's...
But when you look at it, so I would say, there will be new things, but the best thing you can do is do all the basics extremely well, from hiring, from planning projects, from agile, to doing testing, to doing deployments, to listening to customer feedback. But people don't like that because people want to know that there's some magic thing coming along.
Yeah. I want to come back to that in a second. I just want so I agree. There is a clear relationship between AI and the blockchain, which is that people talk complete rubbish about both of them. But you're right. Underneath there is AI. But I want to relate it to the big data point because, again, if your point is correct, and I think it is, if it does come down to data, people keep saying data is the new oil.
Do they still say that? They said that a couple of years ago.
They still do say that, but it's not
Maybe
quite,
they say that at Davos, but I wasn't there.
It's probably a Davos thing. But it's not really, because oil gets used up.
I actually think that is a good analogy, but not for the reason I think.
Data doesn't get used up. Data makes more data.
If you give like a tanker full of oil to someone who doesn't have a car and said, there you go, it's fine, but you have to have a vehicle to use the oil. And the problem with the big data thing is, again, it is mostly an infrastructure play. Get your data in an organized fashion. And then on top of that, the very last thing, if your data is good, it's sanitized, there's no duplication, it's safe, then you can run AI on top and you should get some reasonable answer.
You torpedoed my inappropriate metaphor below the waterline, because what I was going to say was, but if we are going to use data as the new oil, which it isn't, but if we're going to use that as then we need to build refineries, and that's bringing it back round to the AI.
And then the AI would be the car, the last bit, but that is just a little kind of launch vehicle. But there's a whole ecosystem that has to be there. I'm agreeing with you that there needs to be an ecosystem. You can't just jump from the raw product.
I want to go back to Cyril's point. I mean, if it is right, then I don't see how we can do anything with these vast mountains of data without AI, not just basic machine learning, but like real AI.
But you need to get the data in a good, tractable format to use.
No, I agree.
That's the refinery.
You need
that would
reformatting for sure.
That would, by implication, say, just as way we were talking about smartphones, by far the most important technology of the coming years is going to be AI. And your point, which I think people didn't quite pick up on, is that. So, for example, I mean, we're going to be talking about this afternoon as well in the closing discussion. But if it really is about AI, then people like Google with TensorFlow and so on are going to put that AI in the hands of everybody.
Yeah,
everything's going to have AI in it.
Honestly, yes.
Yeah,
everything's going to have AI.
A hygiene factor.
That is something that is already for sure. So, it's okay, it's a given. Everything's going to have AI, and the question is really, what are you going to do with this AI? Because today, what people do with AI, they do chatbot. Okay, that's fucking insane. Okay, you know what that is? It's like a bot talking to you, pretending to be a human. I mean,
I know.
One day maybe, but today, it's generating a lot more frustration and anger than it's generating customer satisfaction. Because it's not about, using AI is not about creating something to pretend, it's creating intelligible information that could be actionable by humans. So it's empowering human to make it more emotional, not to make it less personal, because otherwise it's the wrong direction. Period. That's not where we should go.
But when I connect to the bank, as I did the other day, so I connect to the bank and I go to the chat thing, because I'm old, I don't want to phone them. I like the chat thing because I can see, and after I've finished, I can go back to it.
That's because of you, they do chatbots.
So no, I like chatbots, but
I know.
I genuinely don't care whether it's a person or not at the other end. I don't care.
You care if it works.
Well, you should.
I care if it works.
You know why? Because
I don't care if it's a person.
people have been behaving like robots for the last 20 years, serving you. When you call, they don't answer, and when they answer, they say, well, you know what, I don't know, I'm going to check, and I call you back in 20 minutes. They never call you back.
But the computer would always call you back.
Yeah.
Could I give you a story from my past experience in AI? So I worked in speech technology, speech recognition, and speech synthesis, and I did it for 20 years. And all during that time, I lived in a hype field. Basically, it didn't work. People hated it, but everyone said, one last push. And they typically thought, we'll just have this extra clever algorithm, and then the whole world will start using it.
White knight.
And I would have got out of the damn thing earlier, but I realized that it sunk my whole career into this thing. So I needed to go. I did 2 startups. I was a professor at a couple of universities. And then finally, Google bought my last company, and a tipping point came. And Siri, Alexa, and Google Home were 3. And I was there in the middle of it, and I could see the wave tipping, and we went from people, minimal usage, to billions of people using speech products all the time. When I get in a car, it is giving me the driving directions in the Google text-to-speech system, which my team wrote. The usage has exploded. Now, what made it happen? The algorithms, of course, but what made it happen was the quantity of data. Right, and that's what did the tipping point.
Back to Cyril's point.
Plus the smartphones, which meant in the old days we were using handheld microphones to talk, and that isn't going to happen. But the irony is, now I see people all over the world who don't care anything about AI talking to Alexa, talking to Siri, talking about Google Home, about what I consider to be nonsense. But that's the way tech works. The inventor has no...
Nothing happens forever.
The inventor has no control over the end use.
But
and off they go.
Just to go back to you, so we're agreeing on like the data is the next thing. I think we're agreeing that without AI we can't transform that data into anything. But you, just in passing, you said something about the kind of regulatory envelope that shapes this. We don't yet. I mean, I think I saw something about the EU is calling for a moratorium on face recognition stuff, which, but we're nowhere near having the kind of regulatory frameworks or even the ethical and moral infrastructure for those frameworks around AI yet, are we? So in 5 years, will we get those, or in 5 years will it still be Siri, what's my balance? Did you order ballast? No, what's my balance?
On the issues, first of all, we need to stop talking about computers taking over the world, right? Just forget that stuff. We do need to start talking about facial recognition and privacy, and because these are real things that can really happen. And I think that the regulator should do what it does in banking. It should set parameters and frameworks so that it protects the consumer, but it doesn't stop innovation from happening. And that needs to be a conversation. But anytime everybody talks about Terminator and the robots taking over the world, you know, everyone gets it back up. But facial recognition is something that needs to be debated and agreed, because it can have tremendous benefit, but only if society gets buy-in to its use.
No, this is a conversation we need to have as a society.
Yes.
How much of your own data and identity do you own? How much should you own? How much should the state have? And, you know, the Chinese have a very different view on that to the Americans, to the Europeans, actually. But I think that's going to be the big thing that plays out over the next 5 years. And I don't think it'll ever be done. So, yeah, is it going to be there in 5 years?
And honestly,
not the speed these regulators work, but the regulators these days are at least more open, and they talk to businesses like ours, and, you know, they seek opinion, and then they make the rules, as a rule.
What's really funny as well is really, I mean, we talk about the tech, one hand, the regulator, another hand, and actually, none of them make the world. What makes the world is what people do. Okay, so if there's a tech that nobody uses, the regulators won't even bother. If there's a poor little piece of tech that everybody's using, then the regulator will have to follow and regulate. So it's really about usage. If you talk to people and you ask them whether they're in favor of facial recognition, all of a sudden, it's Big Brother, 1984, George Orwell, it's going to be a disaster. And then 2 seconds later, they unlock their smartphone with their face. So, you know,
George Orwell is a because the thing is, George Orwell thought that the government would build this system and survey us. And in fact, we started surveying each other. In fact, had the government tried to do it, they would have failed. They'd be hopeless at this kind of thing.
I think one of the things
Orwell's vision was kind of wrong with that. We're actually not in an Orwell world. We're actually in a Philip, in my opinion, we're actually in a Philip K. Dick world. Sure. Because the crucial point of Philip K. Dick's, you know, visions of the future, Blade Runner and so on, was that you didn't know what's real. And that's where we've ended up. Well, right? because of Google and TensorFlow, anybody can make deep fakes now.
Correct.
It's your fault, basically.
And it is my fault. And one of the things I did was voice transformation. So you speak a voice and it comes out in somebody else's voice. And of course, it wasn't very convincing when I did it, but now it is very convincing. And that's the thing,
cool.
is that that's the thing that, you know, when you're the people who are the pioneers of the technology, because it doesn't work very well, you don't really worry about it. But then, of course, somebody improves it until it does work very well, and then you go, oh, yeah, look at that.
So we're in a business which is heavily regulated and pivots on security.
And should be.
No, it should be, of course. But now I'm starting to worry, because now I'm thinking, well, we're giving away all the data to the big tech companies. We've got AI making deep fakes and pretending to be us. And so some computer in the Philippines will be ringing up my bank and telling it to send all the money somewhere. What are you?
I mean, that's an arms race, though.
What are you lot going to do to keep us safe from all this?
Well, first of all, modern tech practices are better in every realm of security and privacy. So a proper cloud-native solution, your data is encrypted, your data at rest and in transit. personal
right.
data leaks that happen from legacy enterprise systems, and you can name as many as you want. These should never happen in a proper tech system. Your data is encrypted, you have private keys, you have secret keys, you have tokens, and there is a massive information to keep you safe.
Is your stuff all in the cloud, or you have it still on old-fashioned computers somewhere?
Can you say that again? Sorry.
Is your system cloud-based? All of your data is in the cloud, or do you still use computers?
No, it's not in the cloud.
So you have actual computers?
Uh-huh.
So you're a security risk?
Yeah.
Well, I'm on Paul's side.
And as practitioners,
well,
there's stuff that
honestly,
happens every now and again. So everyone's seen the Travelex thing that happened over the last 2 weeks.
Oh, yeah.
You know, $1 billion business now worth, you know, maybe half that, a quarter of that. And
But-
still down, and they're still
my
running
God.
it. And you know, but every single fintech guy, be they running great tech, or be they running, you know, version 1 and Windows 8 patches, that was the problem at Travelex,
Yes.
will be going, okay, I really need to address this now. Their board will be going, I really need to address this. And they will change their practices.
It's really funny you bring that security thing. Today, what most of the Western world rely on is a technology that is very insecure and that everybody is very comfortable with. For example, your card. Okay, your card is protected by nothing when you do online payment, nothing, and protected by nothing when you do contactless payment, 0. Okay, not to mention that on the top of the POP, it's protected by a 4-digit PIN. So really, we're talking about, and now we're talking about biometrics and stuff like that, and it's like, is biometrics going to be more secure? Come on, Dave.
Because
Well,
you know, we
but that
made-
is a legacy system. I mean, we do have ways of doing secure authenticated transactions. It's just, and you have to give it to the card companies. They have done pretty well in getting that network done. But the next way to do it is fingerprint unlock, private keys, public keys, back and forth in the card, and make sure you have this second factor authentication and do it. I'm sure that will arrive.
I actually think cards are an example of a fantastic success. Because we in Europe, we managed to, you know, we came up with chip and pin and whatever, we rolled all this stuff out, and we were absolutely successful in moving our fraud to the United States.
Yeah, exactly.
Which is-
The weakest link.
Yeah, the weakest link. So from our point of view, it was fantastic. I mean, cards
It's
are
like the
still
two
rubbish,
guys running
but-
away from the leopard, you know? It's like he puts on his running shoes, and the guy goes, "You're never going to outrun that leopard." And the other guy goes, well, "As long as I outrun you, I'm fine."
Right. But just to amplify Paul's point, because you were nodding in agreement there. So basically, actually, cloud is optimistic because you're putting security in the hands of people whose life depends on doing security properly. And
Absolutely, and we need a few catastrophic disasters that are very public to just shake all the legacy guys up. And you know, a couple of massive bank hacks, and they're all going to be phoning you up buying your solution. You know,
that was
already
my,
are, yeah.
because I was assuming that the Travelex Bitcoin ransomware had been placed by one of the security vendors. I just assumed that was.
I can say nothing.
It's clever marketing. Listen,
They did
guys,
catch.
we've got to cut it off there. None of these guys knew the questions I was going to ask them. You got honest answers from people who really know what they're talking about, and I hope you appreciate that as much as I did. Thank you very much, guys.
Thank you.
Thank you.
Thank you.